Welcome everyone to Vested Interest. This is Shane, and in this video, we will be doing our weekly portfolio update. We did add $1,201 in new capital to the portfolio, so we will cover those funds, what we added. We've been adding to existing positions pretty regularly. We did do some recent reallocations here over the last couple weeks, so check out those videos if you want to see all the activity over the last month or so. Definitely some changes in the portfolio. But in this video, we will cover this week's buys. We didn't make any sells, any options we were in, any dividends we received. That is the intent of this video. We do this every Sunday morning. Now, for those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, and I do that weekly, into your portfolio, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach. Like I said, every week pretty much I'm adding capital to the portfolio, consistently investing into my portfolio on a weekly basis, but I also do larger purchases, as you saw here a couple weeks back. Whenever I get my bonus, typically once a year, or if I get a side job or something like that, I'm going to cover all that. All of the activity in my portfolio is out in the open. I do this every week. There is nothing to pay for. I don't have any other sites to send you to. But if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell down below so you're notified whenever I put out any new content. Again, I do this series every Sunday where we cover my portfolio update. I also do a stock pick of the day series Monday through Thursday every week. When the market's open, we take a look at a company stock that's pulled back on the day and see if it will make it onto my watch list. Run it through my screener and see if it makes it onto my watch list. There's the thanks button down below for anyone who might want to buy me a cup of tea, and a special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. All right, and first up, we will cover options, which are not going that well this year and didn't go much better last week. We only ran or attempted to run a couple options plays here. You can see we tried to run 5 covered calls on SCHD. 20 cents per share would have been the options premium we received, $26.50 strike price, and it would have closed out on May 2nd, which would have been Friday. But this one didn't go through, and same thing with this one down below. Kroger, ticker KR. This is out of consumer staple sector. SCHD is an ETF. We tried to run one contract, closed on the same date, May 2nd, with a 20-cent premium and a $73 call. I feel like Kroger is pretty expensive right now, so that one's one I'm probably going to continue to try to run options on while it's at its peak. I may add in Cisco next week, CSCO, the information technology, not SYY, the consumer staple. 2 different companies with a similar name, or at least it sounds the same. Isn't spelled the same. We'll probably add Cisco and maybe a couple others, but these did not go off very well last week, so we'll continue to give it our best here. I'm pretty conservative on options. If you run options, let me know how it's going for you. In volatile markets, typically options do pretty well, but maybe I'm just being too conservative. Dividends, on the other hand, have been very good for the overall portfolio. Last week, we did receive dividends from 3 different companies for a total of $537.11 in dividends. And that was split up between, like I said, 3 different companies here. First one, Verizon, ticker VZ, out of the communications sector. They paid us $250.22. And we do have the DRIP set, and that just means that anytime, it stands for Dividend Reinvestment Plan, DRIP. Just means anytime a company like Verizon here pays out dividends, those dividends automatically get reinvested back into the company and buy more shares. So in this case, that $250.22 picked up 5.74576 more shares of Verizon. CVS Health Corporation also paid us dividends. They paid us $175.45. Ticker CVS is out of the healthcare sector, and that $175.45 went right back in and bought 2.45179 more shares of CVS. And last but certainly not least, on May 2nd, we received dividends from AT&T, $111.44, and that $111.44 went right back in. It picked up more shares of AT&T, 4.04059 shares. These new shares added an additional $26.57 in additional capital over the next calendar year. And this is a perfect example of the dividend snowball effect. So you see, we had shares of Verizon that we've already paid for. We've already bought these shares. They're in the portfolio. Those shares pay out dividends, right? These dividends go back in and buy even more shares, and it's starting to really be a big tranches of shares, 5.7, 2.4, 4 shares. So, and then these new shares add additional capital over the next year, and this new capital will add additional fractions of a share the next time it pays out. So even if I don't add any more to Verizon, CVS, and AT&T, this position continues to grow and compound on itself, and that is what is referred to as the dividend snowball or the compound growth effect. And that's what we want. We want our portfolios to be growing as we add new capital, as the dividends get paid out, as the dividends get raised, and as dividends get reinvested. That's all ways that the portfolio is going to continue to grow and that snowball get larger and larger. And the hill it's rolling down is time. Now, we did go in on April 28th and added $698.39 in new capital. And with those funds, we bought 2 shares of Comcast Corporation, ticker CMCSA, picked up those shares at $34.01 per share. Added 1 more share to our HP Inc. Position here, ticker HPQ, out of the information technology sector. Picked up that 1 share at $25.39. Picked up 8 shares of Occidental Petroleum, ticker OXY. Picked up those 8 shares at $40.47. 6 shares added to our Pfizer position, ticker PFE. Picked up those 6 shares at $23.19 per share. And 2 more shares of Lam Research, ticker LRCX. This is out of the information technology sector. Picked up those 2 shares at $71.04 per share. And these new shares added to the portfolio added an additional $23.63 in new capital over the next calendar year. And we weren't quite done yet. We went back in on April 30th and added $502.80. This was the last buy for the week here. And with those new funds, this $502.80, we picked up our weekly buys, SCHD and VTI. We add to these every single week. So 3 more shares of Schwab Strategic Dividend Growth ETF, ticker SCHD. Those 3 shares at $25.60. And our other weekly buy is the Vanguard Total Stock Market ETF, ticker VTI. 1 share at $268.90 there. And we added an additional share to our Alphabet position, ticker GOOGL. 1 share at $157.09, $157.09. And this one, I think by the end of the week was right around $163, $164. So I'm glad I went in a little early. Usually I wait till Friday, but I was spent some time on the lake doing some fishing on Friday, so I knew I wasn't going to get to my portfolio. So I went in a little earlier in the week than I typically do for my weekly buy here for SCHD and VTI, and added it then. Same thing with VTI. I think this one was back in the 270s by the end of the week. SCHD, I think, is still hovering in that $25 range, but these two definitely shot up by the end of the week. So I was happy to get them a little cheaper than where they closed out the week. And this $502.80 in the new shares we picked up with it added an additional $7.76 in additional capital over the next calendar year. Total invested was $1,201.19. Total passive income added $57.96. That's with the dividends received as well as the new capital added. So nice to see that growth week over week. Very nice indeed. All right, here's a quick run through the sector weights, how we sit currently with the overall pie in the breakdown between sectors. Communications makes up 10.74% of the portfolio. Consumer discretionary sitting at 0, but I will tell you, Lennar is looking very attractive right now. It is a home builder. It may be one I look to add here to the portfolio in the next couple of weeks, but I wanted to do more of a deep dive into the financials. It is on my watch list right now. I will probably do a video again about it this week if it pulls back and take a look at it. It is one I am interested in, has been on my watch list for a little while, and like I said, it is really pulled back right now. So it might be the newest addition here over the next couple of weeks. We will take a look at the financials probably today and see how it looks. Consumer staples makes up 8.83%. And if you have any other suggestions right now for stocks you think are attractive in the consumer discretionary sector, go ahead and drop in the comment section down below and let me know. Consumer staples makes up 8.83%, energy at 10.06%. We're going to continue to add to Occidental in this particular part of the portfolio. Cisco is one I want to add to in consumer staples, SYY. So there's a couple that I'm looking to add to over the next calendar month here. Same thing with communications, Comcast. I want to continue to add there. But financials makes up 2.26%. Healthcare makes up 14.42%. It is in second place there. Second largest slice of the pie. Industrials at 6.92. Technology is the largest slice of the pie at 19.08. Materials makes up 2.32. Utilities at 8.62% of the pie. And REITs and real estates at 6.11, and ETFs is currently at 10.64. And eventually, ETFs will be the largest slice of the pie just by the nature of adding to VTI and SCHD every week, regardless of where they're at. It will start to take over the rest of the portfolio, but that's all right. That's by design. Over here to the right, you can see those same sector breakdowns, the percentage that matches up to the pie, and the dollar amounts allocated to each sector as well. All right, here it is, folks, and I do show this every week. I want you to see a real portfolio built out over time. One, for transparency. I think it's important for those of us on the space that talk about finances and portfolios in general to be showing you what they really look like built out over time. It's one thing to talk about it. It's one thing to show it, right? You can say you're a financial guru if you want. I mean, I don't claim to be a financial guru. I did not go to college for this. I do not have a degree in finances. I'm not from a wealthy family. I'm learning as I go, so I want you to see that as well. And hopefully it gives some of you encouragement out there, confidence out there that you can do it too. You don't have to be a financial guru. You don't have to pay someone to do it. You don't have to pay for courses like some of these folks on YouTube are charging you for, or to access their mailing list or any of the other stuff that they might be trying to charge you. If people are doing that, I'll be honest with you, I would switch to someone else. Following someone else, because you shouldn't have to pay for this stuff. There are other ways us content creators make money on YouTube. I don't really make any money on YouTube. I think I've made a total of $4.99 over the last 3 years. And that's okay. I do this as a way to show some of you out there, like I said, who are like me, who didn't go to college for this, didn't grow up in a rich family, don't have a rich uncle who's shown you how to do this. That again, give you the confidence, hopefully, that you can do it yourself and to see the ups and downs of a real portfolio. You are going to have market swings, right? Google was in the red just last week. Now we're up 4%. Lam Research, same thing. We're back up again. CVS, if you've been watching for any length of time, I was down at 25% at one time. Now it's up 4.52%. Now we still have positions that are down. Comcast is still down. HPQ is still down, but this was down 14-15% just a couple weeks ago when we were adding to it significantly. Now it's only down 3%. Occidental, same thing. Pfizer, it's been down for a while. We've been nibbling a little bit on that one. Just added 6 shares this past week. SCHD is still down, so that's one I want to continue to add to. Valet is still down, but there is not as much red as there was in the portfolio last week or the week before. Certainly not as much as there's been in the last month or so, and that is the nature of portfolios. Positions go up and down for a number of reasons. Sometimes it's around earnings, sometimes it's around news that's reported, sometimes it's just around stuff going on in the world that is not necessarily associated with that company, but they are getting hit like everything else is. If you have an overall market downturn, everything might get hit. So there are different reasons at different times for stocks to go up and down, and they do that. There is a 52-week high and a 52-week low for every single position, and it can retest that 52-week low or retest and set a new 52-week high at any time, again, for any number of reasons, and then retrace and head back to a 52-week low from that 52-week high. And sometimes a company will do that 2-3 times a year for no real reason other than market movement, and that's just how it works. But anyways, here are all the tickers, all the positions in the portfolio in this column, total shares here, current price, and all of the prices will be as of the close of business on Friday. Market value here, my average cost per share. This does include reinvested dividends. Same thing with purchase price. This is money out of my pocket plus any reinvested dividends as well. Total return, whether I'm up or down, I'm going to show it. You're going to see it. percent up or down here, percent return here, right? Obviously, if you see the red, that means it's in the negative, and the green just means, and the darker the green means the more I'm up, right? You can see AT&T is up 60%. That's my biggest gainer. Kroger is up 59%, again, 72.02. So didn't get anyone to bite on that option play, but that's one we tried to run options on. Cisco is one we might add to the list of options. CVS, I think I'm going to add to the list of options. I'm trying to run options on positions that are in the positive, that if they were called away, I wouldn't mind them being called away and reinvest the options premium as well as any funds received back across the portfolio or into other positions. Like I said, Lennar is one I'm watching right now that looks relatively attractive in the consumer discretionary sector. So let's say I ran an options play on one covered call of CVS, 100 shares here, and it was called away. I'd probably just take those funds and reinvest it into Lennar and not run the wheel in CVS. Maybe I'd run a covered call or something on Lennar, but Cisco and CVS are two I think are right there that I want to add to it. Probably continue with Kroger. Probably continue with SCHD. I wouldn't mind taking 400 or 500 shares here and trying to run covered calls on SCHD week over week, over and over again. But we'll see. I'm trying to find a sweet spot where I can collect options premium, but keep the shares as well. I don't necessarily want shares to be called away. I want to maintain the shares I have and just collect options premium, but it's just not going that great for me right now. What sector each company falls in here, whether they're a quarterly, monthly, semi-annual payer, I have it here. And when it says semi-annual payer, some of these, whenever I had other positions, they might have paid only once a year, twice a year, sometimes 3 times a year. Valet is like that. I know it says semi-annual, which means twice a year, but there are times where they pay 3 times a year. Sometimes they paid out 4 times a year, but typically it's semi-annual a couple of times a year. So that's why I put it there. I also want to cover why I have some of these highlighted yellow. This just indicates what positions in the portfolio have already raised their dividends, and we did have 2 more dividend raises this week. Cisco, SYY, ticker SYY, out of the consumer staple sector, they raised their dividend here up from 51 cents to 54 cents. So that was one of the raises. And there was one other one. What was it? Google HPQ. Now I can't remember which one it was, but we did have one other raise here. Enbridge, EPD, Google, HPQ. Oh, it was Google. That's right. It was Google raised their dividend 5%, or was that last week? Maybe Google raised their dividend last week. I thought there was one other one that just raised their. I know SYY raised their dividend, and one other company raised their dividend. I want to say it was Google, but I may have covered that raise last week. Let me know in the comment section below if I've already covered that raise. Was it Cisco? They raised it up to 41. Comcast. No, it was this one. Yeah, there it is. American Waterworks. So I must have covered Google last week. That must have been last week's raise at 21 cents. American Waterworks was the other one that raised their dividend this week. Ticker AWK. This is out of the utility sector. Raised their dividend up 8.2%. I just can't recall what it was before this 82 cents, a fraction of a shares, but that's the other one. So AWK, American Waterworks, and Cisco, ticker SYY, were the 2 raises this week. Google raised their dividend last week, now that I think about it. Yield on cost in this column here, my portfolio weighting, or I'm sorry, current yield here, my yield on cost here, portfolio weighting here. So on the previous slide, we saw each individual sector's weighting. This is for each individual position's weighting, right? And I do have a bit of a rule in the portfolio. I don't want any one position to be more than 10% of the portfolio. I don't want any one sector to be more than 20 to 25% of the portfolio. So there's nothing that's really close. I think the closest right now is Google at 6.3. Is it? Yep. Yeah, 5.83 at VTI. So nothing's really close, so I don't really need to back off anything. I can add to everything currently. But again, if something was to get around 10%, I would just back off. Doesn't necessarily mean that I am selling the position. It just means I would back off from investing in it until it was a lower position and then maybe look to add. Now, if it had run up extremely and was, worth trimming some of the position to add to other positions, I might look to sell. There's definitely some reasons to sell if a position is overweight or overvalued, but that's not necessarily the only reason. Estimated annual income in this column, payout months here, dividend growth year over year, and I will adjust this as they adjust their dividends, right? Like AWK, I just adjusted that one. SYY, same thing, and I really wish SYY would do larger raises. They're right around, they're at least beating most inflation. Inflation for most years is around 2%, so they're just above that. But I would like them. They have a pretty low payout ratio. It'd be nice if they were around 4 or 5% or 6 or 7 or 8 or even. But we don't control that. 15% of a 52-week low. I use this as a high water mark for my average cost per share. I want my average cost per share to be under where it sits at 15% of a 52-week low. This is also when I start to look at new positions whenever they reach 15% of a 52-week low. Obviously, I want them as cheap as possible, but all this really is to give me a high water mark for my average cost per share. All right, total shares, 7,425.55 shares currently. Market value of the portfolio is sitting back at $357,034.92. There's been a nice rebound in the market over the last couple of weeks here. Purchase price, how much I have into the portfolio. Again, this does include reinvested dividends, $334,314.79. Total return, I am up again, $22,720.14. Again, it has really rebounded recently. We'll see if that continues. I am up 6.8%. I do not focus on this. This is not my focus. It is nice to see I am in the green, but even when I'm down, I say the same thing. I do not focus on market return because unless I sell the positions, I don't get this. I only get this if I sold all the positions in the portfolio. That's the only reason or the only way I would realize this gain. Current yield sits at 3.623% of the portfolio. My yield on cost at 3.869% of the portfolio. And this is what I focus on. That's why it is circled in red, and it does not necessarily mean I am chasing dividends, but I definitely am focused on the dividends paid out by all the positions in the portfolio. And it currently sits at $12,936.25 and continues to grow week over week, month over month, year over year as I add new capital. As we see every week, I add new capital. As the positions in the portfolio increase their dividends, like we saw with AWK and SYY this week, as positions in the portfolio pay out dividends, which we saw with AT&T, Verizon, and CVS this week, and as those dividends get reinvested back in and pick up more shares, again, like we saw with AT&T, Verizon, and CVS this week. Those are the ways the portfolio grows over time, as well as market growth, right? We do want our positions to be growing, but the dividends, that is the way the dividends grow. And again, currently sits at $12,936.25, and we are getting back to that 13,000 mark, and we will definitely be there by the end of May, now that we are into a new month here. Dividend growth year over year currently sits at 5.9% of the portfolio. Let me know what's going on in your portfolio. Have you seen a big rebound like I have? The market overall has rebounded. I've definitely seen a rebound, especially in the tech space. Again, Google back in the green again, LRCX Lam Research back in the green. And Cisco has been in the green pretty nicely. Again, probably going to look to add Cisco and CVS to the covered calls that we're trying to run, as well as continue on Kroger. I tried it on AT&T. Not much option premium for AT&T. I imagine that's because it's such a low price per share there, and sometimes you don't get much option premium. But we don't have enough shares of Union Pacific to run anything there. So I'm probably again looking at Cisco, ticker CSCO, CVS, going to try for Kroger again, and then SCHD. I'm going to try to run weekly covered calls on this one, and then if they were to be called away, I'd just do the wheel on them and do cash secured puts to get the shares back into the portfolio. And since I'm adding to SCHD every single week, that makes sense to try to do that for a little bit of extra options premium. But again, have not been doing great in options this year. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. What is going on in your portfolio? What are you buying? What are you adding? What are you selling? If you are selling anything, what dividends did you receive? And are you running options, and how is that going? Would love to hear from you down in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I also do that stock pick of the day video series Monday through Thursday when the market's open, taking a look at a company stock that's pulled back, running it through my screener. So if you have a company you'd like me to do that with, Again, drop it in the comment section. Work it in on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. And if you've made it this far into the video, don't forget to hit that like button, share with anyone you think that might find value in the content, drop a comment down below, make sure you're subscribed, and watch the video. And thank you for watching the video to the end. Watch time is another one that the YouTube algorithm looks at. Really appreciate everyone who has made it this far.